Like any stock, Tesla has had periods of rising and sliding value. In 2022, the carmaker's stock fell to 45 following the stock price has been under tremendous market pressure despite rising by almost 50% in 2021 and a staggering 743% the year before. This is because of a number of unconnected variables that challenged the stock's performance, but also contributed to the company's share price decrease. After the CPI showed signs of easy inflation, I bet you want to know more about the company's future. More importantly, though, I know you clicked because you want to know whether the astute Charlie Munger, the 90-year-old vice chairman of Berkshire Hathaway and a close friend of Warren Buffett, thinks the stock is ready for investors to buy or if waiting is necessary given the stock's perceived weakness. So keep watching, hit that like button, and subscribe. Almost all tech and growth equities, including Tesla, recently balanced considerably higher during that session. The Nasdaq gained 7.3%, while Tesla's shares increased by nearly the same amount. However, Tesla's great growth story and performance are overshadowed by Elon Musk's continuous drama with Twitter, so the company has yet to capitalize on this gain. In a recent interview, Tesla received accolades for its remarkable accomplishments in the electric vehicle sector and quick expansion from CNBC billing investor. Charlie Munger recently expressed his optimism about Tesla as a whole and how, in his opinion, it surpasses expectations in an interview. Despite his skepticism, Charlie Munger recently lauded Elon Musk's Tesla as an incredible achievement in the American auto sector. With a market valuation of more than $600 billion as of January 2022, Tesla has grown to be among the most valuable firms in the world. Tesla produced 1.91 million cars over that period. The carmaker produced 386,759 automobiles in the first 2 quarters of 2021 and delivered about the same amount in the third quarter of 2022, with 300 vehicles. For the quarter that ended in September, the automaker's revenue increased by 55.95% to $21.454 billion. According to Munger, Tesla's revenue during this time was around $75 billion, up 59.8% from the same period the previous year. The CEO of Tesla, Elon Musk, has significantly improved society. Musk has stated on record that the auto industry's acceptance of Tesla is a small miracle because there hasn't been a profitable new automaker in a long time. As an investor, Charlie Munger has a stellar track record. Earlier this year, at the Daily Journal's annual conference, the investing expert warned that the economy was in danger because some individuals were living in depressingly cool places and projected that the investment markets were in significant difficulty. Munger went on to say that venture capital and other types of private equity have an X in them. These excesses were also significantly influenced by the state of the Bitcoin markets at the time. According to the 12-month percentage change in the Consumer Price Index, he continued, most people are finding they are spending more on commodities than they were a year ago, and inflation is rising at an alarming rate globally as prices continue to rise across the board in a range of spending categories. The Federal Reserve increased its benchmark interest rate by 0.75 percentage points in October of this year, marking the third consecutive major increase in the rate, which now stands at 3.25. Investment bank Morgan Stanley recently published a note regarding Tesla in which it stated that although Musk's ownership of Twitter would influence the opinions of certain customers, any subsequent decline in Tesla shares might offer investors a chance. Tesla's market cap is currently less than 200 due to the Twitter deal and other reasons that are exerting pressure on the company, although it may be impossible to quantify any potential impacts this may have on Tesla shares. Morgan Stanley claims that the high valuation of Tesla shares is primarily due to investors' confidence and their ability to model the economic outlook for the company's core energy storage and electric vehicle businesses, which are supported by a favorable economic backdrop. It has recently been put to the test and is a prevalent issue among many investors. According to the research, Tesla has strong financial standing in terms of car production, delivery rates, profits, profit margins on sales, and technology. It is unclear whether the company's stock will be able to achieve new heights, though, as it has been trading below 200 recently. Morgan Stanley cited this potential and their research notes to suggest that an unfavorable public opinion of Tesla could affect demand for its goods. Despite having a high degree of vertical integration, Tesla nonetheless depends on a number of business alliances. Negative effects on investor confidence, money availability, the automaker's partnerships with government agencies, and public support are all possible. While most of its funding comes from within, Tesla also needs to work closely with foreign organizations, particularly those in the US and China, to industrialize renewable ecosystems and advance onshore battery research. For the time being, in order to realize the growth that its $600 billion market cap indicates, it will need to keep up its strong relationships with the investment community. The investment fund also offered a minimal case for the $150 price of Tesla stock. It was stated that Tesla will seize any chance to cut car prices in the future by cutting its production costs. Potentially negative public perceptions and slowing EV demand, especially in China, might cause Tesla to test our $150 bear case before the year is over. Morgan Stanley thinks Tesla might keep bringing down the cost of cars. It said that its team in China had started to implement significant price reductions in that market, and as a result, it anticipates price reductions in Europe when production at Tesla's Giga Berlin surpasses 5,000 units per week. As a self-funded top-line grower, Tesla stands to gain greatly from the large-scale re-architecting of the U.S. renewable supply chain. Based on its 2025 market share and profitability forecast, Morgan Stanley estimates that Tesla stock may trade at roughly 12.5 times EV per EBITDA, or earnings before interest, taxes, depreciation, amortization, and 23 times PD. Tesla is taking control of a sizable chunk of the quickly expanding EV market. Along with the rise in demand, Tesla is also figuring out how to meet it conveniently. The company has already revealed that the average cost of parts and assembly for one of its cars is $366,000. They sell for at least $10,000 more. In contrast, the manufacturer recently lowered the minimum weekly waiting period to 1 week for all of its Model 3 and Model Y automobiles. For Tesla enthusiasts, this is fantastic news because the wait times have had a big influence on sales. Despite Toyota delivering 8 times as many vehicles as Tesla, demand for the company's EVs will rise because of the shorter wait times. In Q3 2022, Tesla announced a net profit of $3.29 billion, making it evident that Tesla is not only dominating the EV business, but is also rapidly becoming the largest automotive firm in the world. What do you think about Charlie Munger's comments concerning Tesla? Let us know in the comments and stay tuned for additional updates. Hit that like button. If you appreciate the video and find it helpful, please subscribe. We'll see you in the next video.